and everything is 400 points
and again,
in a different direction.
Never do that again. There are no sick days at tastyfx. And we're talking about vacations, possibly having vacation days in FY28, but it's still an open topic.
Okay,
So,
cool. Understood.
Yeah, what did you miss? How about the move in the euro? Unbelievable. You doing okay, though? You look great.
Oh, thank you.
Yeah.
Yeah, I'm doing pretty solid. A little bit better. I don't know if it's like the temperature changes or what, but this time of year is just like...
Winter's old.
Yeah.
That's just, it's just, it's staying light a little bit longer. I think is this weekend. The clock thing happens, so we get a little bit more daylight at. We spring ahead, right?
Spring ahead. So when it's 6 a.m., it's actually 7 a.m. So it's darker in the morning.
Right, which is fine, but you get more daylight in the evening, so that's good. But it's just, again, it was snowing yesterday. It was 35. It was gray. Mm-hmm. It's old.
Yeah. It is rough. It is definitely. There's the dog days of summer. Is this the doldrums of winter? What is this?
I don't know. It is because you get those tweaks of 60 degrees and a sunny day, and we've lived in Chicago long enough to know that that's purely illusional. Mm-hmm. And sometimes we get the most snowfall in the end of March or even April. So we still got another 60 days before we get excited that 60 is warm or 55 is warm. Again, we'd take 55 right now if we get some sun. So it is what it is.
But I'm back. I'm feeling pretty good. I'm surprised. Everything has shifted.
Oh, my God. This dollar's a pig.
Yeah. What the heck happened? We went from the strongest dollar market that we've seen in, the last couple of years, the strongest dollar market we've seen in decades. But the last couple of months looked like a resurgence. How many people were calling for parity in this euro market? Yep. In early January, we got down to 102, traded 102 for not even 24 hours, Pete. And we were, as a content company, readying all the parity content.
Right.
And now it's 108. What the heck happened?
And, so 400 pips in 3 trading days.
Crazy. All
one way. We flirted around that 105 and a half, 106, that range of congestion.
Yeah.
And we talked about, the market had to clear that, convincingly close up there. And we even saw the market close at its highs yesterday. And it's funny because I got a couple of emails. Ooh, is this a time to sell euro? And it's like when it's 3 o'clock and you're 3 pips off the day's highs on a 100 pip rally, chances are you're going to get the opportunity to sell them higher overnight, which everybody got if you had waited.
You pose a really interesting concept that I think you and I take for granted, and it's not to say that you and I know something that other people don't know.
This is just years doing it, it some days right, some days wrong.
But you and I never almost never put on any trades in that time frame of 3 p.m. to 7 p.m. Central Time. So essentially around the U.S. close before Asia wakes up. Because you tend to see this okay, we're going out. This is yesterday afternoon. We're going out above 107.50. And it's to your point, oh man, I can sell the highest prices right now. And it's yeah, sure you can. But what is coming in to bring that market lower?
So has everybody. So has everyone else, and that's the challenge. You know what? And we traded higher from those levels, and probably what's holding us back a little bit. And it's not now that we've run 400 points, I'm bullish. Not saying that at all. But we have an ECB announcement, a rate cut expected in 40 minutes. Yeah, 7:15, and they will have a press. With everything that's gone on geopolitically, tariffs-wise, Ukraine-wise, Germany has taken a stance, and it's fascinating that they have, again, within the structure of their government, they can only spend so much on things like defense, on other things. Now, they've proposed that, and they call it the speed break. All of a sudden, everybody's talking about speed break, and they've proposed basically materially, and they have to go back to both of their houses, their equivalent houses of Congress, the lower and upper chamber, and they're proposing to eliminate that and have a massive injection into spending to basically own their own defense, and it seems like untether them from not having to rely on, but counting on relying on previous defense relationships. So that you see this huge potential injection of cash via the government into the defense industries, into and everything that goes into that, into manufacturing. The DAX, which is the stock index for the German economy, is traded at lifetime highs today.
Okay.
So where we're struggling to not completely roll over, and I mean today's tape action in equities.
Yeah.
We had a rally yesterday, and it was a really light volume, and they've done a lot of damage to that rally, and it doesn't seem like we're going to hold it. And we're at levels where it's getting, the tape action is acting a little sick. So where we're seeing a lot of strength. So with that strength and that spending in Germany, you see that play through you would think, well, what does that spending have to do with the currency? Is that a more interesting place to invest now? Are those defense stocks interesting? Are all the ancillary stocks in Germany interesting? Probably. And at 104, we're seeing, and this is, again, is all this flowing into the German stock market? I have no idea. But the idea of, that seems like a logical pathway given what they're potentially going to spend. The market is taking that into account very efficiently and very quickly. So, curious to see your thoughts. The pace of the move. You've got to, yes, 400 pips, which is almost 3.75% in 3 days, is a huge movement in FX. But what we also do know is that when we get into new ranges, and this is not a new lifetime range, but a new range, and the market moves quickly, it becomes much more elastic. So is there opportunity to play both sides? Absolutely.
A couple interesting points there. One, the fact that we have this huge move, this news playing out over the last 24 to 48 hours, and it's rubbing up right against this ECB meeting that is in, less than an hour. And to your point, is maybe holding this euro hostage at around 108. And to your point, yesterday, we're going out of the U.S. session with this ECB, the next morning at these highs. And the question of like, oh, do I need to sell them right now is kind of like, well, what's going to happen during the Asian session to this dollar or euro market before this ECB meeting? And it doesn't always play out this way, but nothing is played out. We've sat exactly right there. Now, do you view this meeting as an opportunity to be relatively flat going into it, and something that could give you a reflexive move of like, okay, if I wanted to be short, maybe I'm looking to sell the 108.50s or something like that, and look for some two-sided action around that? Or are you saying to yourself, okay, I want to be short, I'd go into this short just in case I miss something here? Or is it a non-event at all? Obviously, the rate cut is priced in. Sorry, let me pull up my economic calendar again.
Right.
The rate cut is very much priced in. The market knows this. The euro-dollar market that we just looked at knows this. And so the actual decision, relatively meaningless.
It is. And long-term German rates, which are boons and bubbles, are actually, those yields are rising because they're anticipating they're going to fund all this by having to float a lot more debt. So they'll have the announcement. It seems like the 25 pips is built into the cut, but I imagine it'll be the statement at 7:45 of, and remember, this is not the German central bank. This is the European Central Bank. So now Germany is the engine that drives a lot of European growth, but not the sole participant. So German rates may be heading higher, but European rates as a whole may be a slightly different story. So it'll be interesting to see the talk afterwards, because if they're going to talk about the cut rates, but they imagine if this spending goes through, there's going to be a higher rate structure somewhere down the road. I don't know what the messaging is.
Yeah.
So if you're dying to be short, it's a great place to do it. I would say that I think you're going to get trades on both sides of 108. But if the cut is announced, they don't really say much. I got to imagine they may extract a little more pain on the short side of the market. So
what's also interesting, and maybe this is the play, Pete, is I mean, obviously I'm coming to this story a little bit late here, being out yesterday, but
they knew they could get away with rallying 400, 300 points because you weren't here to stop it.
What is the story with this seeping into other markets? Because it's also been 280, 290, let's just call it 300 point rally in the pound market. This Aussie that's been really tough to wake up. It's been a 135 point rally there. This Kiwi that you've been looking at specifically the last couple of weeks.
Kiwi,
140 points there. This Swiss franc here, goes from 90 all the way down to right now 88.60. I mean, is an ancillary play better for this event like an ECB? And also we have the U.S. non-farm tomorrow. But why is this correlation so strong between the euro and every other currency during this move?
I think that's interesting because on a percentage basis, cable, again, the closest trading partner to Europe, having the greatest percentage move, but none of them near the percentage move of the euro.
Sure.
So, but you bring up a good point. If I want to be short, do I pick one of the tangential? That's still a nice rally in cable.
We're almost at 130.
Yeah, is that actually a more interesting short that may not be as? You're not selling the one thing that's outperformed, which is euro, but you're selling something that has had a decent rally, and that if there is a give back, or even if there's a little bit more, may not participate in that upside because it's really been dragged along with the others. So maybe it holds ground. Aussie, a good rally. It's still cheap levels in Aussie, cheap levels in Kiwi. I wouldn't be inclined to use the Aussie or Kiwi rally as ones to short. I think the sterling piece is interesting. Poor Canada is just having a tough time. Really, I mean, we're up a little bit, but even today, we couldn't really build on a little bit of what we pulled back on. It's still trapped in the vice of
with
tariff, yes, tariff, no.
With a move like this, you would all the other currencies we just went through, you would expect this dollar CAD to be down around 142,
exactly,
or even
142 and a half.
Because you look at the closest kind of comparison here in this Aussie market, and now we're well off of those 62 cent lows. I mean, we're not. The equivalent really of euro or sterling would be back into this range here, but we're off of those lows. Whereas, if you take out this rounding error of the craziness at the start of February, we're still really close to those extremes in this dollar CAD.
And if you think it's a dollar story and you want to be the contrarian, you can look at euro sterling too.
Yeah.
And if you want to be short that euro piece and put some long sterling against it, put the laggard against it as a way to kind of go through this number with a little bit, go through this rate announcement with a little bit of protection. Again, this just shows you euro's outperformance to sterling right now. If you sell this, you're selling euro, and instead of buying dollars, you're buying sterling. You're taking the dollar component out of it. You're not selling that spiked high because both these currencies have appreciated against the dollar.
Sure.
But it's a different type of trade that will give you a little bit more.
It depends on what you want to do.
Yeah.
Because the last thing you want to do, maybe it's not the last thing. I don't know what's going to be the best strategy the next 48 hours. But where I've found the most trouble is you look at your deck of cards here, Pete, and you say, which one is the biggest number?
Right.
And you just go there. And in this case, you would go to this euro dollar market and you would say, well, this is the biggest this is, 400 points that we've seen. And Pete just showed me this euro sterling market that's only 130 point rally
Right.
to sell into. Well, I want to sell the 400 point rally, not the 130 point rally. That's not the best decision maker. If you use the same analogy in equities, you're just selling Tesla or buying Tesla every day.
Right.
You're just trading the most volatile piece that's in on your board there. And so that's why I bring up some of these other pieces, because like I mean this is a
I think the cable trade is
this is a big rally,
Yeah.
and this is probably the biggest extreme against the strongest currency against the dollar
Yes.
the last couple of months here, because it's not, oh, we put in these lows of
It
122.
did get it beaten up to the downside, and it's more reflexive to the upside. This could be an interesting trade. Again, if you're dying to sell the outperformer, which is euro, and 4% is a huge move. I mean,
Yeah.
we blew through. Glenn and I were talking at, hey, we're opening 90 points higher. That's 2 standard deviations.
Huge move.
Selling this, you're going to be right 95% of the time. This is this is the 5% window. This is why we always talk about management on both sides of the trade of delta 1 or static delta products. And I think the case is you're going to have to be very comfortable if you're selling euros here that you're going to reach and set those mechanics, and you're going to buy what you feel is an uncomfortably or unreasonably high euro because the euro continues to rally.
Well,
and if you're willing to do that, yeah, you're selling something that's incredibly rich right now. But you're just going to have to be comfortable that you can't argue with that. You sell the 108s, whatever they say in the statement gets everybody juiced up. DAX rallies, euro starts printing 108.10, 108.20, 25, 30. You can't just say, well, that's wrong.
Well, so let's
too
actually,
much.
let's actually expand on that idea a little bit, because I'm glad we covered a lot of bases. There's a lot of currencies that you can go to. We talked about correlation, everything else. Zeroing in on just the theory and the math behind this type of move,
Right.
the probabilities around this type of move. Let's take a look at exactly what Pete is talking about, because you're talking about a 400-point move in about 3 trading days,
Right.
let's call it here. And if you look at just try to do the math in your head, or kind of use this almost as, you love maps, Pete. You kind of use this distance here as like, okay, that's 400 points. Let me see where else this has been covered in a few trading days,
Right.
and see what's happened, because you're exactly right that we look at the standard deviations for this euro dollar market, and 50 to 60 points has been the one standard deviation 1 day move. And I think the weekly move that would extrapolate to maybe like 200 points in a given week. And so 400 points within a week, you're at a 2 standard deviation move. The odds on that happening is 95%. Of course, this is why markets are, so many people trade them, so many people
Right.
watch them. They're unpredictable. They are random at the end of the day. They can do anything. They can do a 5% likely move. But you look at the last several times that we've seen these big of moves in a couple of days, and there is reversion. You see down here, I'm looking in November, you've got 200 points to the downside, and then 50 points. You got another 150 points, and then a rally back here. You've got plenty of occurrences. Another one here in December where we dropped in about 2 or 3 trading days from 105 down below 104. So that's 150 points in about a day or two, and then you saw the bounce back. Plenty of occurrences of reaching that 1 to 2 standard deviation move and it coming back. But keep in mind, as we look at our chart here, there has to be, out of, if there's 10, 20, 30 occurrences of a big move, 100, 200, 300 points, and they all kind of reverted a little bit, there will be one that moves 200,
Right.
300 points and doesn't revert. And I'm not saying this is that, but you have to be ready for that, because to your point, volatility begets volatility.
Right.
If I'm selling the 108s here, because it is a multi-standard deviation move,
Right.
it's probabilistically this doesn't happen a lot. You might have to take 50 points, 100 points in heat, or just take that loss and get out, because it's rare that you see such a big move and volatility then just collapses and it just drifts in
Right.
your direction.
Right. And I mean, I think there's materially a very different story unfolding. And I don't want to read too much into, all the drama we've gone through the last 60 days, and tariffs on, tariffs off. This guy's bad. This guy's good. But
volatility is rising.
Yeah.
Without even getting into it, volatility is different this month than it was March of last year.
Absolutely. And FX is elastic. When it moves quickly, you look at that and say, boy, that's such a move. But the faster it moves like this, the more elastic it gets. So I'm very mindful that as high as a high is, you need to start always go through your mechanics of, okay, where am I wrong? What am I comfortable with?
Mm-hmm.
Again, you want to give it more rope, you're going to have to bring your trade size down a little bit then too. So make sure that those this market, again, market's price efficient. It can trade 108.5 or 107.5. We don't know.
Yeah.
But the fact that if it could trade 108.5, what am I going to do then? Am I going to be uncomfortable with my shorts from 108?
Yeah.
Am I going to be able to become mechanically? Am I going to manage at? I thought 108s were a huge value area. 108s and a half, or even a better value area.
Sure.
Am I going to break my mechanics and just bunker into the trade? So if you make those decisions ahead of time, you're more likely, if you want to lean aggressively into this, it's again, the math says that Meta had a run, I think it was 22 up days in a row. Now, statistically, when you reach 5, that's anything above 5 up days in a row is a statistical outlier. So if you sold it on the 10th day, you would have been way outside of the statistical bounds and would have had 11 further up days. So there is that propensity. We like to use math to turn the 50-50 bet a little bit in our favor, but we're still mindful that mechanics have to stay in place.
At the end of the day, the market is relatively memoryless.
But what's really cool is, it is. What's cool is, sure, that euro is it's a huge move. But with FX, you've got a lot of subtle but correlated but different slices of product available to you that you can use.
Well, in the last one I wanted to take a look at, because this is one that has been really on its own trip the last, I mean, if you thought that Aussie was different than euro the last, several weeks of trading, this yen, which usually does kind of play a similar game as euro and sterling, has really been on its own trip, but seeing a similar trend the last couple of trading days. What's been going on with this dollar yen market, and would you favor an extreme in here more than those other markets, or how do you view it differently, or do you at all?
I think looking at the yen here, is this a big move down? Yeah, it's almost 10 handles down. I'm less inclined to say dollar yen is cheap at 147, and maybe that's just because I've traded it at 160. I've traded it at 78. So it is, though, when you think about it, has this been pulled by rate divergence? Has it been pulled by the idea that if U.S. equities continue to weaken, we're probably going to see more rate cuts priced into the marketplace a little bit in the U.S.? And is that going to be helpful for the yen? Absolutely. Where are we?
So because I bring it up because broadly you would say, oh, this yen has got to be correlated with the euro. But I think what you're saying is, at the end of the day, the last couple of days is a broad U.S. dollar story.
Right.
Euro's getting some extra juice because of the news in Germany and everything that's going on there. But the dollar yen story continues to be an interest rate story.
Right.
And that dollar is really getting whacked because Japan is holding in as expected. The last couple of weeks, I haven't heard really any news out of Japan, but you have a scenario where a month ago you had a 60% chance that by the end of 2025, rates would be 25 or 50 bips lower in the U.S. Now you have about the equivalent percent chance that they're an extra
75 to 100,
an extra 50 bips lower, and so they've priced in essentially 0.5%, 50 bips, 2 25 bip cuts, whatever you want to say, lower in U.S. rates, and that's the dollar story most likely there. But either way, I love your point that so much stuff on the board here, all the different flavors of U.S. dollar, if you are trading primarily U.S. dollar pairs, is giving you different looks. We'll see which are the ones that revert, which are the ones that keep going. It'll be really interesting.
This has been a great start to the month. And so we've got this rate announcement. We've got U.S. non-farm payrolls tomorrow, which, again, the number itself is meaningless. We'll certainly get movement off of it. So a lot of things in play right now, a lot of elasticity, volatility. We have not seen the two-way action in euro. It depends on what you define two-way action as. If you're willing to take 30 pips on the scalp, you had opportunities yesterday, 2 of them, to scalp around it. But if you're looking for the full pullback, that's going to be a hard one.
In the grand scheme of things, it's been 2 days.
Yeah.
So we'll see. I know it's been a painful 2 days, but we'll see what happens.
Yeah. All right, let's wrap it up. Coming up next, Tom, Tony, and Vanetta. We'll see you back here tomorrow at 6:30 for Forex Focus.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second.